OK, well, live now to Portugal for the very latest on the country's debt reality. Alberto Soares is president of IGCP, and that is the country's debt agency. Thank you very much indeed for joining us this morning. May I ask you, first of all, about China and exactly what happened over the weekend with Hu Jintao's visit? Did he actually agree that he would be able to purchase some Portuguese debt?
I'm not able to comment on that. What I can say is that we have been intensifying our efforts to diversify our investor base. And in that context, as we have done in the past, we have visited Asian investors, including China, and we continue with that efforts to diversify our investor base. And and we have heard, during the weekend a number of statements from the authorities, including China's authorities, that are positive in the sense that it appears that China is involved with Portugal in a number of partnerships, and that is a positive development.
Right, but they didn't actually buy any debt.
Excuse me?
That China hasn't actually committed to buy any debt.
Well, we have I'm not able to comment on that, as I said. That is not a matter of signing a commitment. Is more a matter of being present in the market, and I believe that Asian investors, including China, are aware of the situation and are participating in the market. But I won't be able to say more than that.
Okay, Mr. Soares, how much debt do you still need to sell this year? And are the estimates of gross financing of about 21 billion euros for next year correct?
For this year, we are basically we have issued more than 93% of our funding needs for the year. We have announced a bond auction for this coming Wednesday, which will be the last bond auction of the year. So for this year, we are basically done in terms of funding needs.
And what about next year? About what's the estimate for next year? About 21 billion euros, is that correct?
But, well, that should be around that, but we need to have the final approval of the budget, which is well underway, as you know, and then we will announce our funding program for coming year.
Now, with your 3-year debt yielding almost 5%, which is around the same level as Greece is getting for the emergency financing it got from the EU IMF, at what point would it make more sense for Portugal to use the ESFS rather than the markets?
That's really a question for the Portuguese government. Again, I'm not able to comment on that. The only thing I can say is that we maintain our commitment to source our funding through the market, and that's our approach, and we maintain that approach.
Now, if financing costs do remain at these levels, would you consider changing your maturity mix and sell more short-term bonds?
That is really a question that will have to be seen under the exact circumstances we may have to face. But we have a guideline under our mandate, through which we cannot go beyond a certain amount of short-term debt in terms of maturities. For instance, we cannot, under any circumstances, go beyond 25% of debt maturing in the coming 1 year, coming 12 months. So we will maintain very much that mix. We are below that level at this moment.
Okay, Mr. Soares, thank you very much indeed for joining us.